Hello everyone, welcome to this channel. My name is Ruben and today we're going to talk about the big ideas from ARK Invest from 2021. This series will consist of 15 parts and this one will be about part 4, digital wallets. Digital wallets. Well, digital wallets represent a 4.6 trillion opportunity in your pocket, and ARK believes that Venmo and Cash App and venture-funded startups are likely to upend traditional banking by activating the mobile phones in the users' pockets and handbags. And today, digital wallets are beginning to penetrate the full traditional financial services stack, including brokerage and lending. Digital wallets, they could serve as a lead-generating platform for commercial activity beyond financial products. And according to ARK's research, digital wallets are valued between $250 and $1,900 US per user today. But this could scale to 20,000 per user, and that represents a 4.6 trillion opportunity in the United States by 2025. Yeah, incubated in China, mobile payments are 2.5 times its GDP. And you can put that in a graph as well. China third-party mobile payments versus China GDP. On the x-axis we have time, and on the y-axis we have US trillions of dollars. The purple color represents China third-party mobile payments, and the black color represents China GDP. The volume of mobile payments in China has exploded more than 15-fold in just 5 years, from roughly 2 trillion in 2015 to an estimated 36 trillion, nearly 3 times the size of China's GDP in 2020. Digital wallets have become a global phenomenon. You can look at North America, you have Cash App from Square, Venmo from PayPal. If you look at South America, you have Mercado Pago from Mercado Libre. In Europe, for instance, you have N26. And if we move to Asia, we have WeChat Pay from Tencent and Alipay from Alibaba. In the United States, digital wallet users are surpassing the number of deposit account holders at the largest financial institutions. ARK put this in a graph. On the x-axis we have time, and on the y-axis we have deposit accounts per annual active users in millions. The black line represents JP Morgan deposit accounts, the green line represents the Cash App, and the purple line represents Venmo. And Square's Cash App and PayPal's Venmo each amassed roughly 60 million active users organically in the last 7 and 10 years respectively, a milestone that took JP Morgan more than 30 years and 5 acquisitions to reach. At the end of 2020, the number of JP Morgan Chase deposit account holders totaled approximately 60 million, while Cash App's and Venmo's annual active users scaled to 59 and 69 million respectively. Digital wallets can acquire customers for a fraction of banks' customer acquisition costs. Well, you can also put that in a graph. On the x-axis you have a variety of financial products, and on the y-axis you have a range of customer acquisition costs. And the gist of it is as follows. For credit cards, bank retail checking accounts, the customer acquisition cost is relatively high, and for a digital wallet it's very low, and ARK estimated that with a value of $20. Even in 2019, Brett Winton was already very bullish on digital wallets.
Digital wallets. According to the research ARK has, the digital wallets should be able to upend traditional bank branches. But the question that we often get as pushback is, what exactly stops banks and the incumbents from just acquiring their own alternatives to these digital wallets?
Well, first of all, they're a little late. Like Venmo, if you count by number of deposit accounts controlled, Venmo and Square Cash are both top 6 banks in the US. Okay, so the Venmo's number 2. Square Cash is growing something like, I mean, we don't know exactly, but it's more than double year over year on the most recent data point. And so these banks, which are sitting on fixed assets, there's more than $100 billion in bank branch real estate. Each bank branch costs $1 million, and you have 7.5 employees assigned to it. When they build out a branch, they're basically pre-buying a set of customers. It's somewhere between $500 and $1,500 per customer acquired. So Square Cash and Venmo are acquiring customers at $20. So what's to stop them from acquiring those companies? Well, they'd have to pay a hefty price at this point. And then the go-to-markets for those kinds of companies have very strong network effects. I can't get off Venmo because that's what my babysitter accepts. So, I mean, it's like it's very difficult to unseat and displace kind of those network effect applications once they're in place. The JP Morgan shut down Finn, which was its digital bank targeted at millennials. Venmo or Square Cash has been #1 in the App Store in finance for basically continually over the last 3 months. I think Finn never cracked the top 250. So there's also just a bad a DNA mismatch where they're sitting there and saying, well, we can't profitably service these customers because our customer acquisition cost is too high. Whereas Venmo and Square Cash are saying, oh, we can get customers for $20. This is great. So I expect, all right, one more. I know I'm out of time. One more point. Okay, given the number of ATMs that are in the US, imagine that we each, instead of having the ATMs distributed around, we each proportionately took our own chunk of ATM and had it in our house. Then we would each in our house have a box like this big that would spit out cash to us. It's like 4 times the size of a phone. We just have phones. We're just going to have phones. So I think, in a world where you have a bank branch in your pocket, why do you need $100 billion plus of bank branches on the streets? You don't.
Here is an overview where you can see that the bank branch costs are rising while their utility is decreasing. On the x-axis we have time, and on the y-axis we have the costs in thousands of US dollars. As consumers have abandoned brick and mortar in favor of mobile banking, bank branches have experienced increased occupancy expenses, which hit a record high of $568,000 in 2019. Yeah, traditional banks are facing potentially sizable risks at this moment. So you can think about Wells Fargo, Bank of America, and JP Morgan. Digital wallets are entering the unsecured lending market, suggesting that traditional bank lending is unlikely to recover to the peak hit in 2019. And according to ARK estimates, bank interest income on credit cards fell more than 10%. Or roughly 16 billion in 2020, and is likely to drop more than 25% further from 130 billion in 2019 to 95 billion by 2025. And digital lenders such as Square, PayPal, Affirm, Klarna and Lending Club, they are likely to take share from traditional banks. Yeah, at maturity, each digital wallet user could be worth roughly $20,000. They put this in a graph. On the x-axis you have a variety of commercial and financial products in the United States, and on the y-axis you have the value per customer in US dollars. Now you have several components such as brokerage with an attached value of $1,000, payments with $2,700, and if you add all these components together, you're going to have an approximate value of almost $20,000. If digital wallets were to become consumer financial dashboards, ARK estimates that the net present value associated with their financial service revenues will exceed $10,000 per average US user. And beyond financial services, digital wallets could become lead generation platforms for offline and online e-commerce, potentially adding another $9,000 to $10,000 to the net present value of their revenues. Let's now listen to analyst Dan Dolev, where he talks about JP Morgan and going after Square and PayPal is being a really defensive move.
View this as more of a defensive thing by JP Morgan versus offensive, and the reason for that is because Square, if you remember, Square is basically a story of 2 ecosystems. One is the seller ecosystem, which is what JP Morgan is going after, but the other is the Cash App ecosystem, which is sort of the ultimate neobank. And what I think is happening is Square is seeing the average revenue per user for the banks being $300 to $500 versus its own average revenue per user of $45, and they're saying, hey, we can take a big bite out of that. And I think the JP Morgans of the world are saying, hey, we have to be defensive here, and we have to go after some of Square's business because we think that our core consumer banking is going to be threatened down the road.
I mean, listen, I take your point, and Square shares are down 3.5% today, so it's not like their investors are totally shrugging this off. Can Square count on the Cash App, though, if it starts to find small businesses peeling away at the margin to use the Chase technology instead?
Yeah, absolutely. So I actually don't think that a lot of that the threat is actually to Square specifically. There's a lot of other players in the industry which have inferior technology and are the biggest sort of, the threat is bigger to them than it is to Square itself. So I don't think that the overall, people like to associate the JP Morgan or the Chase announcement today with Square, but I actually think even on the point of sale system, the Square point of sale is less threatened. From the Cash App perspective, the sky's the limit, right? If you think about the average revenue per user going up and up and up over time. So that is sort of the engine of growth for revenue for Square. So I think even if there is a little bit of sort of threat from JP Morgan side, this is not going to be felt very much overall in the bigger picture.
And last but not least, sizing the opportunity. According to ARK's research, if each of the estimated 230 million US digital wallet users were valued at $19,900 in 2025, the US digital wallet opportunity would be worth $4.6 trillion. And today, Venmo and Cash App are valued at a discount to private fintech firms on a per user basis. Thank you everyone for watching. I really hope you enjoyed it, and see you on the next part.